In this video, we're going to have 8 common mindset errors that traders make. I've made a lot of these, stay tuned. Hey traders, a very warm welcome to you. So 8 common mindset errors. One of the main reasons that traders fail isn't because of the strategy, isn't because of the market, isn't because it's because we can't get over a lot of the mindset hurdles that make trading so challenging. And believe me, I've made a lot, if not all of these mistakes on here. I'm sure you have too, and it's about addressing each one individually. So let's go and let's see what I've got on here. So the first one is number 1. Beliefs about the market direction. You may well have a great theory that gold is going to go up, gold is going to go down, this cryptocurrency is going to do this currency pair is going to do that, this index is going to do that. It doesn't matter, right? Beliefs about the market direction are purely that. Leave those for the talking heads on Bloomberg and what on the financial news. You are a trader. Forget about your beliefs. Yes, have a bias that you bolt a strategy into, but having a belief about market direction is useless. All it's going to do is draw you into trading unnecessarily, get you into the kind of habit of, oh, I knew that was going to go up, I wish I'd have taken that kind of bad, cycle that you get in your mind. Forget about your beliefs. You're just looking for good trades. That's all you're looking for. Don't fall into the trap that financial media wants you to fall into of believing something's going up, believing something's going down. Doesn't matter. It's the strategy that matters. It's making money. Number 2. Increasing position size aggressively. Been there, done that, and I've been smacked in the face for it quite a few times actually. I've learned my lesson, fortunately, with that one. But you know what? This is very, very common, guys, and I've seen it even with people that I've kind of traded with and friends and acquaintances and people that I've come across. They've traded very, very well. Very, very well. Small position size, plodding along, nice incremental gains, few drawdowns, incremental gains, doing well. And all of a sudden they go 10 times the position size. And what happens? Bang, they get wiped out. And that is because rather than, they don't trade it as they were doing it with the 10th of the position size. And so unless it's suddenly, lucky for them, just suddenly shoots off in the direction of the trade, which very rarely does, they'll either grab it quickly and they'll get away with that one, then all of a sudden it'll go against them and it'll wipe them out. That's a big one, that. Increasing that position size, you should only do it when it's part of your trading plan and you're kind of increasing it, or perhaps you do it for specific setups. That's fine, but just on the fly, whew, deadly stuff. All right, number 3, chasing the trade when you've got no good risk reward. Trades go, you miss trades. Similar to this belief thing. They go without you, and we want to get on board it. We're like, I knew I was right with that. I knew it was going up. I need to get on. I need to make money for being right. Again, we're falling into that trap. It's risk-reward ratio. Yes, you may well have called it, in inverted commas, it may well have gone, but if there's no good risk-reward ratio entry, you've got no business getting in the trade. It's as simple as that. You may well think this thing's going to rocket, but if you can't find a good place to go in and put your stop if you're wrong, or are you prepared to buy it and have a stop right at the low, then may well be. But is that good risk-reward ratio? Probably not. You don't know if that's 10 to 1, 2 to 1, half to 1. You've got to find a good risk-reward ratio entry if you still believe that trade is going. And many people will just chase it. They say, I knew I was right on that. It's going up, it's going up. I want to make money for being right on it. I'll buy. Of course, it pulls back as a natural market will do. Backfills, comes back, tests some support levels, breaks a little bit. You get out, you think, oh no. And you get a double frustration. So you've got to look at it, completely objectively and saying, hey, is there a good risk-reward ratio trade I can take in this now? That was number 3. Right, number 4, trading with no plan. We talked about this multiple times, but it's a big one. It's a big one. Many of you will be watching this and you'll be trading with no plan. All I can say, guys, is just put something together. You just start off with something, the smallest plan possible. You don't have to have reams of stuff. Just literally, even if it's just your risk management, even if you don't want to go full plan, and you should do, but if you don't want to, fine, I get it. You might not want to, but just have some risk management in place, some kind of strategy that means that you've got some boundaries on the trade. There's too many people who are just trading everything possible, any size possible, and I can't emphasize it enough. It's not going to do you any good. You might have wins, but ultimately you will end up regretting it. So just put a plan together, even if it's something just small boundaries for now that you can build on. You don't have to go crazy with it. But traders trade with no plan. Hands up. Beginning of my career, I would trade with no plan. No idea what I'm doing. I'm flying money around all left, right, and center, making money, ultimately losing money. So having that structure is so important. It's simple, but it's so important. Number 5, ignoring the plan due to fear of loss. So often your plan will say, hey, I want to cut my position size now, or after 3 losers, I'm going to come out, and you don't stick to it because you don't want to crystallize that loss in the day or in the heat of the battle. Like, oh, but I don't want to be that much down. Like, if I just take one more trade, I could be back up and I'll feel much better about myself now. You're ignoring the plan, you end up digging a big hole for yourself and you regret it. So often people ignore the plan, not necessarily when they're winning and say, oh, I'll quit when I'm up, on the day or whatever it may be. It's normally the other way around. They don't want to crystallize and lock in the loss on the day because they think they'll feel bad. And do you know what? You will feel bad. You'll feel bad on the day that, hey, I misread that. I was just a little bit, I got low ticked out on that one. I missed this, I missed that. I traded poorly, but you'll get over it the next day. It won't take long to get over it. What you won't get over is if you ignore the plan, you dig yourself a big hole, and you end up having a catastrophic day that takes you months to get out of, or even weeks, or not even possible to get out of. So careful with that one. Number 6, being wrong and letting ego keep you wrong. I've seen this in other guys. Wasn't really one for me, actually. I never really got into a stage of holding something for too long. I think I've done it twice. I'm trying to think back. I think I might have done it actually a long time ago on a FTSE short going into Christmas, and it kind of nailed me quite a bit. It was only a small position size. This was probably 10, maybe 9 years ago. But anyway, not very often, but a lot of people do have this problem with it. They let ego keep you wrong. So you're wrong. You've been proved wrong, the market's not doing what you thought it's going to do, and your ego won't let you say, you know what, I'm wrong. And the thing is, reframe this. Reframe the word wrong to, I'm just, whatever you want to do. I could say, it's a drawdown on the trade, it's a business expense, whatever. I've heard all these kind of things. But the point is, if the trade's not working, just cut it. Forget about your ego. It doesn't matter. There's so many opportunities out there. Move on. Who cares? It's almost a bit like road rage, isn't it? Someone cuts you up, you get annoyed. Some people get really annoyed and they'll get out and start shouting and fighting. Hang on a second. Why are you even bothering? The risk reward of that is the guy pulls out a weapon and hurts you. For what? Because he cut in front of you. I know the instinct is, angry because he's doing this and done that. But it's the ego thing, isn't it? And actually as a trader, you put in this, we sort of digress slightly, in life, as a trader, you start to think, you know what, who cares? Let him get on with it. I'm not interested. What's the point in letting my ego, get involved in it when the risk reward ratio for this trade of me getting out of the car is pretty low, or is not good. So going back to the trading, when you're wrong, forget about your ego. It doesn't matter. An ego will do you more harm than good, specifically in trading. Number 7, jumping in with no defined setup. Big one, this, guys. People see it going. They want to get involved in it. They haven't got a strategy. You're buying a pullback. Well, what's your strategy? Are you buying this? What are you doing that? You're waiting for engulfing, bullish engulfing. You're waiting for a little trend line break. You're waiting for a little exhaustion to the downside. What is it? You have to have at least some idea of why you're getting involved in it, rather than just pulling the trigger, because the whole point of a setup is it frames the trade for you in terms of risk management and where the stop, a sensible place for the stop could be. Number 8, seeking other people's opinion. Very common. People haven't got a process for generating trade ideas themselves, and so they'll look on social media, they'll look on this, they'll look on that. And whilst they do play a part, I'm not saying that they don't. I think there's some validity to actually using these tools or newsletters or subscription services or social, what have you, within some kind of boundaries. What I'm talking about here is people just literally see, a load of people saying, oh yeah, I'm really bullish on this stock, and they just go out and buy it, without saying, oh, I'm really bullish on this stock. Okay, now put it into my filtering process. Does it match my criteria for me going long on it? Yes, it does. I'll go long. Or no, it doesn't. I've been aware of it. No, it doesn't. Maybe I need to put it to one side completely, or set alerts for levels that might interest me as part of my trading plan and my setup. All right, guys, any more you've got, stick them in the comment section below. But these are good ones, and they're worth kind of thinking about a little bit more as a trader if you want to improve. All right, thumbs up if you like this kind of stuff. Don't forget to please subscribe somewhere around here, I believe, if you haven't yet already. And there's a little bell as well that you can click. That'll give you notifications when we upload a new video. Take care, guys. Good trading. I shall see you in the next one. Bye-bye.